Hello and welcome to the July 2021 edition of Pork Talk. The SPP has continued on an upward path in recent weeks and by mid-June had reached around 157 pence per kilogram. So far, domestic demand has been supportive and we were also seeing increases in European market prices on the back of anticipated growth in demand there as food service reopens and the weather improves. However, in the past few weeks, the EU market has stalled. Demand has been more subdued than expected and so prices have declined. Going forward, a weaker EU market may ultimately start to weigh on things here in Britain too. Anything dampening British pig price prospects will be unwelcome news for producers. Our latest estimates suggest that production costs were the highest on record in the first quarter of this year at 174 pence per kilogram. Margins were also the worst in a decade over this period, with producers estimated to be losing on average 29 pence per kilogram. Although prices have picked up since then, we're still some way off the cost of production. Though there are now expectations of better cereals yields for the coming season, which should help lower feed prices, strong ongoing demand from China and low global grain stocks overall mean the situation remains precarious. The situation with China's pig population is of course also important for export demand and ultimately pig prices. The latest figures show that pig numbers were back in growth in June, and pork prices in China have been falling. A number of market reports from Europe indicate that demand for exports is also now falling. While ASF remains a challenge for China, the signs at the moment suggest opportunities here may well become less lucrative in the coming months, which would be a dampener for pig prices both here and in Europe. So it seems global developments will be important for the British pork outlook in the coming months. To keep updated on these and other important issues, please visit the AHDB website. You can also subscribe to our Pork Weekly email.